Is Ethereum a risk right now? And if so, why? It probably sounds like a surprising question to ask because Ethereum is very much everyone's darling right now in crypto. There's a potential ETH spot ETF that may be coming up very, very soon. Their Cancun Deneb or Dencun network upgrade, that's imminent. And that, by the way, could increase the chain's scalability. And hopefully it should also reduce gas fees. So look, all that is good news. But when it comes to promises about gas fees on Ethereum, we have to abide by the rule that seeing is believing. But actually, in this video, we're going to be talking about something else entirely because there's another much more important discussion that we should be having about Ethereum. That is actually a discussion relating to staking and Ethereum. And there are some important related issues that I want to bring to your attention. Welcome to the channel. Happy Monday. My name is Maddie, and this is Altcoin Buzz. I will always wish you the best of luck if you choose to invest, but just remember that I'm not a financial or investment advisor. And so, of course, that means this video is not official financial or investment advice. Listen up if you're watching this as an American, because I'm talking to you. Because we've actually found an exchange that offers you the best of both worlds. Want to trade spot markets on over 400 trading pairs and without KYC? Yeah, you can. Want to trade perpetuals markets on over 150 trading pairs with KYC that accepts Americans, by the way, Canadians too? Yeah, you can also do that. The only exchange we've seen in the market that lets you do both simple spot trading without KYC and perps trading with KYC that Americans can use is BYDFi. And along with the great fees and almost no slippage on trade orders, you also get up to $8,698 in bonuses just for trying BYDFi. And then in addition, you also get our flagship Altcoin Buzz Alpha service totally free for 1 month. And you can check out BYDFi today by clicking the link in either the description of this video or the pinned comment below. Okay, so first of all, there are two major issues when it comes to staking Ethereum. As we know, staking ETH is popular, especially so with liquid staking platforms, those like Lido, because really a platform like Lido offers two advantages. Number one, you don't need to run a node, which would require 32 ETH. That's a big investment by any standard, and the truth is that most of us can't afford that. It's a lot. But the second advantage is the liquid staking derivative that you receive is liquid. So in other words, you can quickly cash that in for other assets if you want. Stablecoins, for example, something like USDT or maybe USDC. And then liquid staking offers you the option to earn double rewards. Once for your staked ETH, which is your principal stake, and then the other rewards come from your LSTs, or liquid staking tokens. And of course, with Lido, that is STETH, or with Rocket Pool, it's RETH. And there are plenty of options. However, these two are the best known LSD platforms. And you can then use these derivatives in DeFi again. However, when you look at staking Ethereum, there are two potential issues that come up. First of all, most of the Ethereum staking pools use only one execution client. And we'll be discussing more on this shortly. But secondly, the maximum thresholds for staking protocols. Let's break this down a little bit. Let's take a closer look at both of these issues. So first of all, one execution client staking pools. Validators usually run two different clients at the same time. And these clients are software implementations. You need them to run your node. And here's why you need them in case you do run a node. One is going to be for consensus. So these clients take part in the consensus process. For example, they validate new blocks. They also propose blocks and come to an agreement with other clients. And then one is for execution. These take care of new transactions that broadcast on the network. And in the Ethereum virtual machine, or EVM, they execute these transactions. So as a result, they kind of maintain the state of Ethereum and its database. So the execution client appears to be the biggest issue. And the reason for this is that 78% of all node owners use the same client, that is Geth. And you can clearly see that in these stats, which have been provided by Client Diversity. With consensus clients, there's much more diversity. Prism, for example, is the biggest consensus client with a 38.88% market share. That's closely followed by Lighthouse with a 33.01% share. And here we can see some improvement in diversity. But going back to the execution clients for a second, if we look at this here, all validator platforms in red use Geth. And as we saw in the previous statistics, that adds up to 73%. And we see some pretty big staking platforms all using Geth. Some examples include Anchor, Block Staking, Binance, Bitcoin Suisse, Bitfinex, Coinbase, Kraken, and Stakefish. Some good news, however, is that all nodes already switched to a different client. However, Lido still uses almost 68% of its nodes with Geth, and Rocket Pool is at about 30%. Lido, however, is down from 93% in Q3 of last year. With a 73% majority, Geth poses what's called a supermajority client risk. That is when more than 2/3 of all validators use the same client software. So when you do the math, 78% is well above that threshold, right? 2/3 would be 66%, 66.6 repeating. And the danger here is that Geth can finalize the chain, and it doesn't need the other chains to agree. We have to talk now about the 33, 51, and 66% thresholds. These are the three different thresholds that you should be aware of. As far as the first, 33%. So the idea is as follows. With control of 33% over the blockchain, a bad actor can disrupt the liveness of a network. This is a fundamental security feature. Liveness just means that a client can finalize the chain. And with a 33% threshold, you can delay finalizing a chain. However, in this case, a bad actor can't take full control of the chain. This is also the threshold that the Nakamoto coefficient to measure decentralization uses. With a 51% threshold, there is now a theoretical chance that the chain will split, and you're going to have two chains via a fork. Bad actors in this instance cannot take full control over the chain, not yet. For instance, the remaining good actors can still challenge double spending and transaction censorship. However, with a 66% threshold, a bad actor now does have full control over most of the block validation process. So for example, they could reverse transactions or even start double spending. This, therefore, obviously compromises the chain's security and integrity. And this goes to show that 73%, that supermajority in Geth, is a serious problem. And it also shows us that diversity in execution clients is sorely needed here. It appears to be an underestimated concern, though, because nobody really seems to be making a big fuss of it at the moment, but it certainly is time that the Ethereum validators and staking platforms wake up to this threat. It is significant. If Geth had a bug, for example, that could just be disastrous for the chain. There could be loss of funds with up to 20% of all ETH, a fork, and Ethereum's reputation would also suffer tremendously. Even Coinbase's CEO, Brian Armstrong, mentioned that he would take a look at the problem, and Lido also slowly started to diversify. But that actually brings us neatly into the next point here that I want to bring up, which is the maximum thresholds for staking platforms. We saw that there's a problem with the execution clients. However, a similar concern actually does run through the staking platforms. Lido is the biggest of those. Its market share is almost 32%. With that in mind, let's look back at those previous thresholds that I mentioned. We learned that the 33% threshold is the first critical milestone. Lido itself is almost at that threshold, as you can see here, 31.6%. Danny Ryan even went so far as to call Lido a systematic threat to Ethereum. If you're unfamiliar with him, he's an Ethereum Foundation researcher. However, the truth is that it would still be very difficult to pose a threat with just a 33% stake. Lido would technically need to align all its node operators. That, by the way, is about 37 of them, so it's possible, but certainly not an easy task. On the other hand, Lido's governance may actually pose an even bigger threat because all LDO holders can vote, but the majority is in the hands of venture capitalists. That, of course, represents a lot of power with only a few shareholders. And so obviously there is a lot at stake here, pun intended, on the Ethereum chain. We as delegators can do something about that and use smaller platforms, for example, not stake with Lido. But validators can also help by choosing minority clients, like Allnodes did. These are all changes that we should collectively be working towards because right now, as far as the numbers tell us, there is this potential staking bomb that Ethereum is sitting on. And again, not all that many people are talking about it. It's something that should enter the discussion more publicly and more prominently. Altcoin Buzz Alpha is proud to say that we now have a winning portfolio spread among different sectors. And additionally, we're also very well positioned to get into good IDOs. And if you're into passive income and airdrops, just check out the number that we've received until now. Add to that the original TIA airdrop and all the others that are upcoming. We've achieved this by giving several deeply researched and diversified calls. Just check out some of these numbers from December 2023, last month. And right now, the plan moving forward is to reallocate profits to low caps, to diversify into new segments, to keep getting bigger and better airdrops, to catch the latest trends like Bitcoin and Linea inscriptions, and to dollar cost average during market flushes. We just recently introduced a yearly subscription to Patreon, and you can take advantage of that because if you subscribe to that yearly plan for a limited time, you get 1 month's membership completely free. Check us out by clicking on the link in the description of this video and the pinned comment below.